It's a pleasure to welcome to our series this afternoon Mr. Geoff Levy AO. Geoff, you've had an extraordinary career of which we'll go through in great detail shortly, but before we do, I wanted to start with your background. You were born in South Africa in 1959. Take us through the early part of your life, if you could, and growing up in South Africa.
Not a huge thing to talk about. I grew up in a very loving sort of all-encompassing Jewish type of family in a smaller suburb of a big city called Johannesburg, called Victory Park. Went to a really good school there all my years, where we where a guy like me could be the top rugby player. That's how bad our team was, you know what I mean? And it was kind of nothing exceptional. Parents were middle class. In the context, it was apartheid South Africa, so as one was getting a little bit older, you started to become aware of you weren't that happy to be there because it didn't feel right for obvious reasons, and it wasn't that easy to be against the system. I finished school in 1976, so coming into the late 70s, coming to university, it was at a time where it was very hard to want to be there within the system, and friends of mine were getting arrested, and we would always be on protests at the university, and it was one of those sort of tumultuous times when things were starting to turn a little bit. It was a long time till 92, but I left there. I met a girl actually whose family immigrated out of South Africa, and I was doing a Commerce Law degree in South Africa at the time at Wits University. She came to Australia, and so when I had a univac, Australia were playing England and the West Indies in cricket, and I thought that's a great opportunity because South Africa had been isolated in sport, to go watch the cricket, but it was actually to see the girlfriend, and I had a little business I ran with a friend of mine at university, so we saved enough money to come on a flight out here, loved it, and found out that I could come and do my LLB here. In those days, it was quite easy to get into the country. There was no queues for immigrants. I arrived here at the end of 1980, beginning of 81, and went to New South Wales Uni to do law, to do what they call graduate law. I'd done a BCom, but because I had credits for a legal BCom, I had to only do 2 years of that. And luckiest thing that ever happened to me, and was very lucky at university there. But South Africa was just, I was typical.
You studied, as you mentioned, a Bachelor of Commerce back in South Africa and then transferred to Australia and did a Bachelor of Law. What prompted that decision, studying commerce first and then moving into the law where you later practiced as a solicitor?
Well, when I was choosing my degrees, my brother was doing medicine and I hated blood. So the next best thing was going to be a lawyer, you see. Because if I knew I was going to leave the country, and you need something that may be useful in that regard, and I thought you could either go straight law, arts law, commerce law, but knowing that commerce had accounting and I was quite good at maths and things like that, that's where I went. You also could do a bit of computers, which in those days was actually just punching in things on a COBOL was the name of the language. We used to have a thing called business data processing, and actually that business data processing was useful to me when I was coming to Australia, because my first job here when I arrived as a student was actually with, in those days, called Telecom is now Telstra, and because I had this year of data processing, I was suddenly a systems analyst. That didn't mean I didn't know too much, but and then managed to get into law school at New South Wales Uni, which was very lucky. I got tertiary education assistance scheme, TEAS, which was $25 a week, which actually covered my rent, just to put it in perspective. And I rented in a little flat below an old couple's house out there in Bellevue Hill, which was fun. And then at night I'd work usually from 11 o'clock at what used to be called the Bondi Tram, which is not the tram that goes, because it was already gone, but the actual place of the pub there by the Bondi Hotel. It's called the Bondi Tram. And I was so good in the bar that all they'd ever let me do is put up, carry the glasses off the tables. They didn't even let me pour the drinks. But it was good because you got almost, you got good rate because it was late at night. Used to close at 3, and it was really good for me while I was a student. It paid for everything else I needed. I arrived here only with 2 suitcases. One was my clothes, the other was a bunch of books I had. We weren't yet into digital science, so could have saved me a lot of luggage. And didn't have much savings other than from we had this little business, a friend of mine actually lives in WA now, David Goldman, where we sold Lovey's cushion duvets, and we had another one where we sold little briefcases which were a little bit damaged. So we bought them from the wholesaler, damaged very cheaply, and sold it to students for what was a lot less they would ever pay in a shop. And they didn't mind it being slightly damaged, because but it looked really smart. And everyone who was doing law or whatever liked to walk around with a briefcase. So it was good.
So you've spoken about your background. Let's talk about your early executive career. You joined Freehill Hollingdale Page in 1983 as a solicitor. Take me through your experiences at the firm.
Well, I first was very lucky because when I was at uni, I got a summer clerk job at Freehills. They used to call us summer beetles. And worked there my penultimate year. And was lucky enough to meet an amazing guy called Kim Santo, the late Kim Santo, who was always very kind and nice to me. And he had this young man working with him called David Gonski. And so from day one, I kind of met these people who turned out to be like the most lucky thing you could ever wish to work for people like that. And when I arrived there in '83, though, my first job was actually in the property area, where I worked with some terrific people. Partners there were Peter Short and Greg Pearce, and they taught me a lot of interesting stuff, which was good. And then eventually I moved into more the M&A stuff as a couple of years in, and worked in the group with Kim and David. And I think they were running around, saving BHP or something. So all the little jobs got thrown to me. So I ended up, sink or swim, and was lucky enough to make sure they were there to cover my back when I screwed up, which luckily didn't do too much of. And built quite a nice practice in M&A, and was very fortunate to become a partner there at the age of 27, and enjoyed my time immensely there, and was involved in some very large matters, and at that time there were a lot of interesting characters, and spent at one stage spent nearly 6 months in the States in 1988 with my family, because we were working on a deal which was cross-border, and ended up staying there longer than I was supposed to, but I loved it, and worked in a firm there called, as a visiting partner, called Scandinavian Smar and Flom, and got lucky there to meet a guy called Flom, which was always great, because later on, when I came back to Australia and there was a lot of cross-border work coming from America, I was someone they knew, so I got referred. It was all these things are, about your right place, right time.
And just take us inside some of those deals and transactions. What were the types of deals? Obviously, as you said, the late 1980s in Australia, so a lot of corporate activity. What were some of those transactions that you were working on?
So one of the funnest things I ever did was very involved with. In those days, he was a very well-known radio owner and a DJ. He started off as a DJ. Mulray went to work for him, called Triple M. We did their licensing and got involved with Rod Muir and and a lady called Trish Richards, who was his bookkeeper. Interesting side note, because Trish had a cousin called Neil Perry, and when Neil Perry, this young man in a ponytail, decided he wanted to open his first restaurant in the Rocks, Trish came along and said, I got my cousin Neil, he's got to negotiate a lease. Do you think you could just help him? He hasn't got much, can't really pay you. And all that. I said, sure, Trish, we'll sort it out, which we did. And it was, Neil Perry went on to start Rockpool in the Rocks, which was that lease, which wasn't really what I used to do as a lawyer, but it was just funny. But the fun thing I had with Rod Muir was he was a character, and he was buying up various FM stations and all this sort of thing. He was also he had a sailing ship, Windward Passage, in those days, and he got followed by 60 Minutes to do a sale of his business of the Triple M equivalent in Melbourne, and being the young lawyer carrying the bags, I was on the 60-minute program. I think as a result, there were people, especially my contemporaries, who thought I was probably a better lawyer than I was, and all of that. So, again, lucky break, because people think you're probably better than you are because of where you are. And that was a real opportunity for me. Also, as a young lawyer, I got involved in some really great, famous takeovers, things like when, in fact, Glenn Burge at Fairfax Radio wrote a book about it, about the takeover of Fairfax. And there was a little company called Turang, which became Fairfax Holdings eventually, which started off as a shelf company in our office, and very involved in all of that, and through that whole saga, which was amazing opportunity for a young partner there, and we saw everything and did everything with all the players in town in those days. So those were good things. I mean, I was very lucky also at the time, in about 1986 or so, the Freehills happened to be the honorary lawyers to the Australian Rugby Union. The Australian Rugby Union in those days was amateur, etc. And so let's find the cheapest solicitor who we can use to give them, do the work. So who might know something about rugby. And I think I knew something about rugby because I still turn up to work with a bit of a nose and a black eye and all that, because I was playing in sub-districts. So I wasn't a great player, I was playing sub-districts. And so I got to know the guys, a guy called Ross Turnbull used to run the Australian Rugby Union, got very friendly with him. And it was just at the time where they were thinking about doing the World Rugby Corporation and having the Rugby World Cup. So the Rugby World Cup started at that point, and I happened to be the lawyer. So I did most of the documentation for it, the actual setting up of the companies, and we had, there were sponsorships and things and all that jazz, and eventually got to know a lot of the rugby establishment. This was way before it went professional, and the first time ever I went in a first class in an aeroplane with my wife when we were in our 20s, was to go to Auckland for the Rugby World Cup final, or actually went for the semis. Australia got knocked out. And I noticed the players were at the back of the bus, and we were in the front, and they ended up staying in Rotorua in a motel, and we were staying in some fancy hotel in Auckland. I thought, this isn't right, this doesn't feel good. And it kind of quenched my thirst for trying to actually make sure that rugby became professional, and got that opportunity in 95, beginning of 95 and 94, when the rugby league clubs were having a big fight, and it was the Murdoch Packer and Super League and all this, and came up with this idea that maybe we should, as a television sport, try and own rugby union, like they were exactly what they were doing in rugby league with the Super League, do it with union, but on an international scale. And that became Peter Fitzsimon's book, The Rugby Wars, and the whole saga through all of that. By then I'd already left Freehills and joined it, went with associates, and with David and Richard were there, and some of the interesting things.
I want to ask you about Wentworth Associates, which, as you said, you joined in 1993 alongside David Gonski and others. What prompted the decision to leave the law and get into corporate advisory and structured finance?
So to be very honest, when I was in the law, I started to hate timesheets. I also felt in those days the lawyers were much more involved in the advisory side of the business, not just the legal, technical. Boutique advisory firms and all of this hadn't really turned up yet. There were investment banks and merchant banks actually in those days, but they were more on they were less, the lawyers played a much bigger place in advisory. And it used to I always used to think about, I'm selling time, but I've actually gave this guy an idea that was probably worth more of it. And also the timesheets became a bane of my life. I did. In the meantime, David Gonski had left and he worked somewhere else first, and he started this Wentworth Associates with Richard Longes, who had also been a partner at Freehills, had left. And I think Richard at the time got seconded to Lend Lease to work there because they were one of his big clients. And David, and I bumped David and I said, look, I'm thinking of leaving the law. I'm sort of at a point where I can afford to pay off my mortgage, so that's why I'm not too nervous about it. My wife thought it was a bad idea, but I thought worst can happen is if I'm no good at whatever I'm going to do, I'll go back to the law. I remember speaking to Macquarie Bank at the time, about who earlier in the piece many years ago had been a client of David and Kim's when I was working there. Worked on quite a lot of their deals and things, and I had good friends there, a guy called Anthony Khan and others. And so I was saying to Dave, I'm not sure what I'm going to do. Maybe I'll go to investment, maybe I'll go to one of the brokers. And he said, well, why don't you come join me? It's like a kind of a hybrid thing where we give advice, but we don't do it with term sheets. You know, we get clients and we retain them and we go from there. And sounded good. And there was a few clients who were prepared to come with me as well, who were happy to not be to give them advice on a commercial basis and kind of legal, technical, but the documentation that could be done by the lawyers. And that was Wentworth Associates. And I think David and I were lucky to have a number of very good clients. David's much cleverer than me, but I think I was probably a little bit more pushy on how the business model should work. And between that and everyone recognising how brilliant David was, we got quite a few good clients, and we managed to make do quite nicely out of it and build an interesting business, which included getting involved in private equity and stuff like that. And that really came about from one day sitting there and saying, we actually have earned salary-wise enough to pay the school fees, the living costs and that. So every next cent, we weren't the kind of people who are going to buy another big car, we're not like, I've still got a 12-year-old car now. Just wasn't what motivated us, but so you'd have to invest it. So we actually thought, wouldn't it be great to invest alongside the clients, and instead of fees, we take some equity, and out of that, doing that and getting a few little stakes here and there, we actually discovered we had a kind of a private equity business. We actually went and hired a guy to manage it for us because we were too busy doing other things. And John Murphy, he had come out of Arthur Anderson in those days, great guy. And that's sort of what happened to Wentworth. So we had a little bit of a private equity. It was more like syndicates. We didn't go and hire a fund or anything. He managed what we had, and we brought other partners in if it was a little bit more money or whatever. And eventually one day we got approached by certain investment banks to buy us, this and the other. And one day Investec from South Africa were looking, and they had a business in UK and South Africa, were looking to get a toehold in Australia. They had a small office that just started here, and they were starting to find their way, and they wanted to do something to get into the investment banking side of not just the, sort of to give them a bit of an ups. And they met us and liked what they saw and thought we could help them develop that bigger profile and that bigger business, and they bought us out. That's we went from Wentworth to becoming Investec, and part of that deal was we had to work for them as part of the workout, etc. And David became the chairman, I became the CEO, and over time at one stage we were co-chairmen, as I was trying to get out of the CEO, we were trying to get another one in, because we had a 5-year deal which had got to about 7 years, and slowly but surely, and then stayed there. It was great years, a great company. We were very involved in creating the culture there and loved it, and the people were great. And even to this day, a lot of the ex-employees or people I worked with there are either working with me now or we work together in other of our businesses. And it was very good. So it was a great transition.
And as I understand it, that was in the year 2001, and you went on to then have a 13-year association with Investec Bank, as you said, I think originally as CEO, then chairman, and then some other roles as well. How did you see the growth of that business in Australia over that, say, 10 to 13 years?
Well, it literally went from a very small-ish business to it grew quite dramatically. We created a great reputation. By the way, one of the clever things we did at the time, when it was very difficult there was a difficult time for the Super League in Australia to get a sponsor and stuff, and we managed to come up with a clever sponsorship arrangement. And because Australia, New Zealand, South Africa could be involved, and we could work in South Africa, there was a big exposure, and Australia we needed to grow and get people to know us. We could do a sponsorship of the tournament as opposed to the teams, which gave us great visibility, and we did that deal, and the South African business could afford more of it than the Australian. But when you start putting together what benefits they all got, Australia got a huge benefit out of that. And it was one of the great associations that I think is still going there between Investec and Super Rugby. But so I was very involved in actually dreaming that up and getting it going. But it did help us with our profile. It did help with the kind of customers we use. So rugby was very suitable for the kind of stuff that Investec was doing here in this country, and it was more of a private bank rather than a general commercial bank. I mean, it was, but it wasn't. And we got a banking license here during my time. We got we created some funds. We did quite a few of those. We developed from scratch a really good, which was the old Wentworth advisory business that went on to do investment banking stuff really well. And the private bank, of which there was already started a business there with lending and stuff, obviously it grew dramatically as well. And eventually we did a JV with some guys to set up a thing called Experian, which was basically lending to dentists and things, and they were people I'd worked for before in their previous life, advised them in my previous life, and they came across, and they started off as a JV and eventually became part of Investec's specialist bank, which got sold eventually to BRQ, and all those things were fun.
Changing tack, you also served as chairman of Specialty Fashion Group for near on 13 years. Take me inside the role that you had with Specialty Fashion Group and I suppose how you saw the retail sector evolve over what was some pretty challenging years.
So it's interesting because Specialty Fashion started as Miller's, and back in the day when I was a lawyer, I was the lawyer to the guys involved with it, and then at Wentworth Associates assisted them with listing and got to know them all well, and that Miller's then went on an acquisition trail to buy Katie's and Chili Chic and a few other, and it grew into a large business with over 1,000 stores nationwide, etc. And as that was all happening, I was the advisor on it and doing the acquisition and helping the guys, and got very close to the main shareholders and owners, who are friends of mine to this day, Ian Miller and Gary Pearlstein. And eventually at a point in time where there were some shifts in the market for retail generally, there was an opportunity for like a private equity injection in there, and we got involved in that as well from Investec at that point. And as part of that, I came onto the board and became the chairman of the board, and lived with that company for a number of years through a lot of ups and downs, and had a lot. It was an amazing company. Had some very, very talented people going through those doors that we got to know, and got to learn a lot about retail, and particularly fashion and plus size and ages, and as a result, also even in our Monash advisory practice today, I think we've got, in terms of retailers and fashion clients, and that we still have a we really do have a cutting edge there, and the guys who work in it are guys who had been juniors of mine, who today are much better than me, running the show, and we still do a lot of that sort of thing, but it all stemmed from those early days. And we'd been involved a lot in retail in those days as advisors, and then ending on boards as Rebel Sport and Freedom Furniture, so we kind of got that retail understanding, and all those things came sort of go in circles as you watch it over the years. So.
One more before we move on. You also served as chairman of Cromwell Property Group during the period 2008 up until 2 years ago in 2020. How did you see the commercial property sector evolve over that time and the business adapt to some of those changes?
Yeah, well, that's a really interesting company. The guy Paul Waitman, who's the brains and the energy and really sort of Cromwell owes everything to. There are other people, but I mean, he was seriously the driver and one of the brightest guys. He was a lawyer who used to work at the Freehill's office in Brisbane many years before that, but came to see me when I was in Investec about some funding facility for allowing them, because at that stage they were just doing syndications, to allow them to syndicate without, before they raise the money. Because by now people didn't want you to just take an option, they wanted you to pay. So we came up with some sort of a clever little product to allow that to happen, where effectively pre-funded it and then trusted the fact you'd be able to raise the money through the syndicate I'm talking about on the equity side, and got to be close to him through that, helped them through that. They merged all their different syndicates at one stage to become Cromwell. There was about 12 of them, and stapled them together. I had a lot of experience with stapling, because I think back in the day with, I still at Wentworth, Dave and I at Wentworth, acted for Mirvac and helped with this technology of what became a stapled security. In those days the tax laws were very different for rollovers and things, so you had to kind of have a unit and a share linked together somehow, and that's where the stapling started, because you couldn't roll the one to the other. So for takeovers, for swapping script and that, there was no relief, which came later. So that's why stapling wasn't needed anymore, but in those days everyone started to go stapling. And when they put these together, they also had the corporate entry and needed to staple it. So to internalise the corporate with the assets of the property, you had to do this, because the one was in a company and usually the assets were in a unit trust for the unit holder. So that's where that stapling all came from, and we got through the tax and all that. And he came to see me about how he'd staple it, which we helped him. And then about a year or so later, when it had listed and was going, it was quite a small company, Paul came to see me and said, look, we're starting to go to that next level, and we'd really love it if you'd join the board. It's all Queenslanders, and you'd come from Sydney, and you've got a bit of a profile, and it would be helpful and all that. And it was the last thing I really wanted to do. And it was a smaller firm, but Paul sold himself and me, and I thought it'd be fun. And I wanted to keep my hand in on something outside, which was property, because I wasn't doing much of it anymore. And agreed. And we had an amazing run. The company literally grew from, sub-billion through to tens of billions and of assets, and we did lots of interesting things. And eventually, we had a shareholder who then wanted to take over the company. So the last couple of years weren't fun, because it was about the whole tactic of all of that, because we wanted to make sure that all our shareholders got, if someone wants to own a company, they should pay a premium, and all the shareholders should enjoy that. Unfortunately, I had to leave that battle in 2020. It went through for another year or so, because I'd been 12 years. And under the stock exchange rules, you literally have to retire 12 years, otherwise you're not independent. And I was intending to retire at 10 years, and everything was going to happen, but that takeover stuff started in the 10th year, so I kind of couldn't leave the ship until the 12th, but eventually I left there. Cromwell went on to get the party that was trying to control it actually kept creeping and bought more shares, and eventually had enough votes, and I was gone by then, and they went on to take it, and so that's what happened with Cromwell.
Let's talk about some of your current roles, our innovation fund. Tell me about that.
So we started off as our innovation fund. It's now called ORF, our innovation fund. And our very first fund was actually, we were in the Monash private capital office one day, and my friend Dave Shane had kind of sold out of a business, and he was I said, Dave, you're going to get bored, come sit one day a week at least in the office with us and things like that. And then he and I used to invest in lots of little startups and all of this together. And often when we invested together and we both agreed on something, they were the good ones. Often if he invests something or I invest something and we had it agreed on, they might have not have been as good. So it was, we saw there was a slight formula there, and we have very different types of skills that help each other, but we got very similar values and things. So what happened was they brought into Australia the ECVLP, the early, which basically gave a kickstart to our industry here. Really did, back in about 2005, 15, 16. And what that did is it said that if you invest $1 in, you can get a certain amount of tax deduction from it, but any capital or income you receive from it, if it's gone into the right type of company, etc., would be tax-free. So there was a big incentive for people to pour money for the first time into venture capital, which was a very small industry in Australia. It was almost cottage in a sense. I mean, Israel had become the startup nation, Silicon Valley was all happening, and we weren't yet. But that real boost that gave, to this day now, Australia really plays above its weight, and we've got some great success stories, all over. And when David and I decided, let's pull some money together and start investing and take advantage of, these new laws and stuff like that, we discovered you need to have a fund, you can only own a certain percentage, So we said, okay, we'll make a small little fund, we'll get some friends involved. But once you start telling one friend and another friend, and everyone starts saying, why are you leaving me out? So we raised our first fund, which was called our Innovation Fund. We hired a guy called Jerry Cecil, it's a long story in that of itself, to make sure it's professional and done properly and all the rest of it. And then we hired some other people. And that fund was a $50 million fund. Today, as we sit here, it's given back at all its investors 3 times their money. And we've still got 8 out of the 12 investments in play, which on paper, and I say on paper because in this game until you exit, it looks like it could be, 5 or 8 times their money. But we're very proud of the fact we've given everyone back 3 times their money, which is probably not, I don't think there's many have done it, literally in cash, given it back. And then when that fund was fully invested, we raised another one. By then we hired a few more people. And so IIF now has had recently launched a 3rd fund, and we've stuck to our knitting. We've always been oversubscribed, but always kept ourselves to an amount. So we went from 50 to 100 and just on 100. And the last one, which was meant to close at 100, literally happened so quickly. We closed it, but it was already at 140. But we said, it's too much money, because in this venture capital space, if you stick to sort of the seed Series A and you're very focused and you make sure you invest in the way we do, you can't actually, the weight of money is not good for you, because you'll have to invest later stage, you'll get FOMO, you'll have to put money where you shouldn't put money, and you might chase valuations that you believe, but you don't really believe, so you don't go there. And we were big investors. We investors in the fund as well as managers. So, we're managing our own capital with a lot of friends as capital. We've got no institutions there. It's all, friends and family offices and those sort of people in that who invest with us in that business. And so it's been terrific. And just to give you an example of how hard it is to invest well in the VC world, if you do it properly, our first fund took about 3 years to deploy about $35 million. We don't deploy the full 50 because you keep some in case you have to defend or follow on, which you do. That took us nearly 3 years to deploy. Now, just so you understand, it wasn't because we didn't see enough deals. We see the guys in the business recently did some statistics. We see almost 20 deals a week. Some of them are, you get a deck and you don't even look at it, but a lot of it is interesting, so you have a first meeting or you do a thing, and then if we like it or we think it's got potential as investment, then we start interrogating it properly, deep diving, all of that. So if you see 20 a week, you're seeing roughly 100 a month. In a year, therefore, you're seeing roughly 120, and if we're seeing 120, it took us 3 years to invest in 12 companies. So just to give you an idea, it's not so simple. If you do the spray and pay your money, you have to do a lot of praying, and you need that one big winner to save you, otherwise it doesn't work. So a different mindset. And we come from an old school sort of private equity mentality and kind of sort of slight, in the early days. I think now that we've had a little bit of a difficult time in the market for tech stocks and there's been a bit of a revaluation readjustment, I think most people are going back to the realistic way of investing. So, I'm sure everyone will do well. But the industry as a whole has done brilliantly. The funds here have done brilliantly. The kick-on effect in all senses of the word for Australia has been amazing.
You're also the chairman and founder of Wentworth Williamson Management. Take us through that business and what its mandate for investment is.
So Wentworth Williamson's an interesting story. There's a guy called James Williamson, Jimmy, who came to work for me at Investec. And when he was working in Investec, we didn't have a fund yet, but we did have what we call direct investments from the balance sheet. We actually did very nicely with him, and I hired him to manage that business, and I worked closely with him in it. And I think he only had one other employee at one stage. And eventually that became we created an opportunity fund. But because he had never been a fund manager, I think David, myself, and a few people put a bit of money in it. We didn't really launch it properly in the sense of letting the client base yet come in, because we needed to road test it for a year at least and make sure that we had all the right protocols. That happened in about 2007, and then we had the famous crash. So thank God we didn't have lots of people there. But the lucky thing about it was we had just started. So we had a moment in time where whatever you bought was very cheap, if you know what I mean. Although our heart had stopped for a moment when it was a lucky break in a sense, and James did quite well. And that then went on to become the Investec Opportunity Fund, which was an equity opportunity fund. And that eventually got sold out of Investec when we left and all of this to Alan Gray. And James went to work there and that. And then by then I'd already left, started Monash Private Capital with Joey Friedman. And at that stage, James one day came to me and said, look, he just wants a small cap type fund again where he can look at anything he likes. Because at Alan Gray, they're such a brilliant company, but they've got such a weight of money. They're excellent, they're doing amazing things, I love it, but I'm only looking at things where it's hard to have different intelligence to other people. Yes, I can take a different view and be contrarian, but I can't, there's these little diamonds that I'd love to buy, but it's of no use spending $5 million investment in $1 billion fund, So he, with the blessing in those days of Simon Murray, who was in those days, the late Simon Murray, who was an extraordinary investor who was running Alan Gray, he let James come to work with me and we started a small fund. That fund became Wentworth Williamson. We kept the Wentworth just because we no longer had Wentworth Associates anymore. Investec it was never used again, and I just felt it was a nice name. And Williamson because it's James. So I thought Levy doesn't sound great, but Wentworth sounded great. So that's how it started. James then, with a very small fund, grew it a little bit, and when it had a bit of a track record, we brought some investors in, and it's very much old-fashioned, long-only, deep value type fund. So it did really well at one stage, and then during the time when the tech stocks were going through the roof, it looked very, very flat, and everyone was going up 30% per annum, and we weren't, but it's because we stuck to our knitting, and to his credit, James stuck to his knitting, and as a result, as things have turned, he has some great companies there and his results are now starting to look nicer than others because the worm turns, and but he stuck to his knitting, very brave, because when you're seeing Afterpay and Zip and all that. And by the way, with my other hat on, when in the venture space, but pre our OIF fund, we were, for example, Dave and I, the seed money, to Larry Diamond in Zip because his dad's a friend of mine, and I saw him grow up, things like, we had a few of those, but that was so we'd invest that, but it wasn't a Wentworth type investment. For him it had to be cash flow, profits, something he could value, something he could understand, and stuck to his knitting. But when you watched all these going through the roof and his companies were like just sitting there doing, not much, It was quite disheartening, but he stuck through it, and fortunately had a lot of very faithful investors who were very happy to sit there as part of their portfolio of investments. And now he's having a good time. But that's what Wentworth Williamson's all about.
Just two questions to finish. What have been the biggest drivers of success throughout your career?
I think the biggest driver of success for everyone is try and keep your feet on the ground, number one, so that you can get on with everybody. Don't take yourself too seriously. But I think it's enthusiasm and drive. And if you lose the enthusiasm for anything, or you lose the drive for things, you need to change. And it's very important. And I feel like every 10 years I've almost changed careers. And it's not so much you change what you do, it's you change the way you're doing something or whatever. And I think what my little mental sort of itch is that when I get into a comfort zone where things are really going well, when my wife tells me, let's take it easy, that's kind of usually my itch. And it's happened at different times, and often even in certain roles I've taken little side ventures, whether it's in the movies, whether it's been in sport, just because I find I need that something that makes me really get excited. And I think when you find something you get excited, you will excel. It's just the way it is.
Final question, what are the future growth industries for Australia, and how are you positioning the different businesses of which you're involved in to capitalise on those opportunities?
Well, I think technology in its different forms, and there's deep tech, there's is very important. I think we're going to see, as you can see, cybersecurity, AI, artificial intelligence, virtual reality, all these things. And I think being a country at the moment, actually the low dollar helps in a sense like this, and the fact that we've got such excellent education establishments, and with the result we churn out some of the best, not enough of, but great. You find that we've got, technically, we're really good here. And I think Australia itself is it's a small pool of 20 million people, but it definitely plays way above its. So when it should represent, I don't know, a minuscule percentage of the market, it's usually it actually represents usually 2 to 5%, funny enough, whether it's Apple sales or Cisco or whatever. And so it's a great place for new disruptive technology to test itself, to make sure how it's going, and then that builds jobs, that brings foreign dollars into the company, etc. I mean, we have example in our first fund, I think it's 8 out of about 12 companies are basically, most of what they do now is in the States. But the R&D teams, the key guys are still here. The foreign capital's coming back to the system. The investors who have made the most, the earlier investors in Australia. So all these things, it's like the wheel. It allows it to grow that way. So I think it's a very important aspect to Australia. I think Australia really has an opportunity to be a clever country, a country that's can take on the world at anything basically.
Fantastic note to finish on. Geoff Levy AO, pleasure speaking with you. Thanks again for your time.
Cheers.